This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices leapt nearly 6% on Friday, with Brent posting its highest weekly gain since February, as investors priced in the possibility that the conflict in the Middle East could widen as Israel began ground raids inside the Gaza Strip. Israel's announcement marked a shift from an air war to ground operations to root out Hamas fighters a week after the militant Palestinian group's deadly rampage in southern Israel. Brent futures settled up $4.89, or 5.7%, at $90.89 per barrel. U.S. West Texas Intermediate, WTI, crude gained $4.78, or 5.8%, to $87.69 a barrel.
Russian crude oil producers are enjoying the cheapest costs to ship to refiners in China and India in almost a year thanks to a growing number of vessels plying the routes, according to trading and shipping sources. The arrival of new shippers working outside the purview of Western governments allows Russian firms to earn more than the $60 per barrel cap that the US and its allies had aimed to impose on Russia through sanctions. It also means that enforcing the price cap will have a limited impact on Russian revenues. On Thursday, the US imposed the first sanctions on owners of tankers carrying Russian oil above the cap, one based in Turkey and one in the United Arab Emirates, in an effort to close loopholes on the mechanism designed to punish Moscow for the war in Ukraine.
Moving on to the top news in the energy sector.
China's crude oil imports in September grew nearly 14% from a year earlier, as refiners stepped up purchases ahead of the Golden Week travel period and manufacturing indicators improved. Shipments last month to the world's biggest oil importer were 45.74 million metric tons, or 11.13 million barrels per day, BPD, data from the General Administration of Customs showed. The figures for September continue a trend seen through 2023, in which imports significantly exceed 2022 levels, when China's economy was hammered by widespread pandemic restrictions.
Finland on Friday was tightening access to parts of its Inku port, which imports liquefied natural gas, LNG, as part of efforts in the wider region to intensify security at energy installations. The move follows sudden damage on Sunday to a gas pipeline and telecoms cable connecting Finland and Estonia, in what investigators believe could have been deliberate sabotage. Separately, Britain said it would step up its military presence in Northern Europe, including deploying 20,000 troops to the region next year, to help protect critical infrastructure at a time of growing concern over Russian sabotage. Next, we have the top news in metal markets. China's iron ore imports in September fell 4.9% from August, customs data showed on Friday, as declining steel margins and rising domestic supply curbed buying. The world's largest iron ore consumer brought in 101.18 million metric tons of the key steelmaking ingredient last month, down from 106.42 million tons imported in August, which was the highest since October 2020. Data from the country's General Administration of Customs showed. However, volumes last month were up 1.47% from the same month a year before.
Chinese lithium prices rose 0.9% this week, the first increase in 6 weeks, on improving demand for electric vehicle (EV) batteries. Spot prices of lithium carbonate climbed to 166,500 yuan, $22,786.68 per ton, from 165,000 yuan last week, though the price remains at around a 6-month low. Battery makers, having received new orders from car makers, are now looking to replenish their lithium material, said Vicky Zhao, a senior analyst at Fast Markets. She said prices could reach 200,000 yuan a ton by the end of the year.
We will now look at the top news in the agricultural sector.
India has extended its export tax on parboiled rice until March 2024, according to a government order announced on Friday. Reuters had on Wednesday reported that the government was planning to extend a 20% duty on exports of parboiled rice until March 2024, a move that could further reduce shipments from the world's largest exporter and raise global rice prices. In August, India imposed a 20% duty on exports of parboiled rice, and this was originally set to expire on October 15th. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.